Technical versus fundamental analysis. I believe it can be summed up in a joke, and I'll do my best at the joke. A technician and a fundamentalist are going out to dinner at Smith & Lewinsky's, and they're having a discussion about markets, and the fundamentalist is getting quite animated about it, and he's trying to say that, you know, he's collected all this data that's basically saying that what the market's doing is wrong. And eventually it's going to turn in the direction that his data says it is, because it has to. It's fundamental analysis. And as he's getting all excited about this, he throws his hands and boom, he knocks a knife off the table. The knife goes tumbling down and boom, right into his foot. Technician looks at him and says, "Why didn't you move your foot?" He says, "Well, all the data I had said that knife was going up." And there's the difference. Now, obviously, I'm a technician, so I really, really enjoy telling that joke. But for me, fundamental analysis is not really a viable way of determining directional trend in a marketplace for the time frame that I trade, which is short term. And I don't think there's any fundamentalists that are trading short term. So before we get any further, let me introduce myself. My name is Tom Alonji. I'm the CEO of Park Avenue Trading. Please like, subscribe to my channel, and make sure that you ring the bell so that you don't miss any of the trading tips that I put out. I assure you that I will not be boring, because I'll say things straight up, honestly to you, that probably no other of the gurus out there are going to talk about. So without further ado, let's get into technical analysis, less fundamental versus fundamental. But let me get my my notes in order, and then we'll start from there. Okay, I got my small page of notes, and I'm going to try to put this in as concisely as I can. And I'm going to go over some things that I believe that you actually need aside from technical analysis in order to be successful trading anything. And this comes from years of experience. I'm not just, you know, and I'm going to be straight up with you. I'm going to tell you the absolute truth as I've seen it over 30 plus years in this business. And a lot of it's going to be completely the opposite of what you're hearing from all the other gurus. And I'm going to tell you, you know, I see some of the videos or the ads that come on YouTube and about like, everything that you're doing trading is wrong. You just need this one thing. Or, you know, use our quant to get funded. And, you know, they're talking about 20-year-old kids talking about a quant. Okay. I've been around when the development of quants, they're over $15 to $20 million just to develop a quant. Okay. And they're not, you know, they're not infallible. Matter of fact, if you really understand what a quant is, you look at long-term capital management, that was a quant and it blew up. There were several instances where quants blew up. And, you know, it just annoys me to no end when I see some of this stuff, because they learn a word and then they just run with this word of quant instead of saying I got a robot. You know, in the beginning of the like early 2000s, it was, you know, oh, I got this robot that does the trading. And why people want robots is because they don't want to take responsibility for the trades. They actually think that a $99 or even a $2,000 thing is going to make them millions of dollars. That's completely, come on, it's completely ridiculous. Okay, so I'm digressing and I'm going off of technical analysis right now, so let me pull myself back. All right, so in my experience, fundamental analysis is not the way to go if you're a short-term trader. It's impossible to put all, you know, the information that you need in place and to trade short-term. Short-term trading does not lend itself to fundamental analysis. Now, the fundamentals are there. They're in the background. You know, they're kind of like an underground river that you don't see. They're moving. Sometimes they're moving very, very slowly. but they are there. But a technical charting system will give you all the information that you need for what's happening right now in the marketplace that you are trading in the time frame you're trading. So I'm going to assume that most people that are viewing this video are short-term traders. Maybe they trade maybe a maximum of 3 days, maybe a week, they hold a position. Okay, so sometimes you could hold a position longer. If the marketplace is moving and it's moving correctly and you're on the right side, why would you want to get out of a position? You know, it's only when you're contra trend trading that you want it to be very, very short term, because you know eventually the trend is going to turn or up or down, and you don't want to lose the profits that you have. Okay, so I can understand that, but when you're talking about fundamental analysis, you need to collect tremendous amounts of data, and it just, you know, it doesn't suit short-term trading. As I said before, I know I'm repeating myself, but also what is really interesting about fundamental analysis, and I've seen it happen firsthand. My treasurer Aldo was a fundamentalist, and he would read tremendous amounts of information. He would read Barron's, he would read the Wall Street Journal, he would read the Financial Times. He also used to get newsletter from Dennis Gartman. He would read Dennis Gartman, and Dennis Gartman kind of just recently retired, maybe a couple of years ago, retired from writing about, you know, what was going on fundamentally about the markets. And Dennis Gartman was always off. No offense to Dennis Gartman, but every time I read his stuff, I'd be like, well, that didn't work out, you know. But the thing with fundamental analysis, and I wrote this down because I found this to be really, really interesting, is that you can't, basically, when you are trying to put together all this information, okay, what happens is, because there's only so much information a human being can basically consume before they start to distort the information they receive. So in other words, you're collecting all this fundamental analysis data, and you're distorting the information to suit what you believe is going to happen in the marketplace. So you're changing it to fit your framework of what you want to see. It's a very dangerous thing, especially if it's wrong. You know, it could basically destroy you. So I believe that technical analysis is the way to go. And in this video, I'm going to go over basically what it is you need to do, and some tips that you need for yourself for your own trading. So the first thing that I want to say is, before we even get into technical analysis, now I'm not going to go over moving average convergence divergence. I'm not going to go over you know, moving average crossover systems or stochastics or RSI. I don't use any of that stuff. I'm a straight price action trader, and I'm basically going to explain to you what price action is for me and how I go about it, how I go about looking at markets. So, and I'm not here to say like I am, you know, the ultimate guru. I am not. You know, I have, you know, I take losses like everyone else. Okay. My main difference is that when I analyze something, and if I'm getting a loss in the marketplace, it's telling me I'm fucking wrong. So I just cut my loss. But when I'm right, I stick with it, and I add to my positions when I'm right. I press on the gas when I'm right. I cut back when I'm losing. That's my main difference. That's how I make all my money. You know, I mean, I make all my money by when I'm right. I go towards where, you know, here. I basically took Larry Height's idea. Years ago, I heard Larry Height say one thing I thought was phenomenal. He said, like, if you're doing something and it's not working, don't do it. If you're doing something and it's working, do more of it. And it's the hardest thing in the world to do, but you need to do it. It's the only way that you're going to make big money. Is like when you're right and the market's proving you correct, you need to add. And there's certain ways to do that, and that's beyond the scope of this video. But that is one of the main little secret sauces, is that you should add to your winners. Okay, so some of the things you need before you actually start doing technical analysis or any type of trading whatsoever is you should have objectives. You know, what are your objectives? Are they written down? You need to write down your objectives. Why are you doing this? And the objective should be bigger than what yourself. You can't just say, oh, my objective is to make millions of dollars. That's not an objective. That's, you know, that is too wide. And there could be some other issues going on with you that actually will prevent you from meeting those goals. Okay, so you need to have a focus on, really narrow focus of why you're doing this, what your objective is. You know, like, I don't want to put anybody off, but I'm going to be completely candid. Like, my objective is to be an economic soldier for God. And I know people this day and age are like, oh my God, he mentioned God. Yes, I believe in God. I believe in a higher power, and it's God. Okay. And, you know, what I want to do is I want to do things that I feel would be kind of like godly, you know, like I want to be able to donate money to certain charities, like for children that, you know, for cancer, like St. Jude's Hospital. I want to give money to that. I want to give money freely. You know, okay, they need 50 grand, I can give it to them. They need 100 grand, I can give it to them. These are some of the things. This is like an objective I have. So that's bigger than myself. I also want to create wealth for my friends and family. I want to crush the oppression of and wickedness of poverty. This is what I believe in my own little circle. This is like my purpose. So you need to have an objective. The second thing you need to do is you need to ask yourself is like, how am I going to meet these objectives? How am I going to do it? And you have a system that will basically have you meet these objectives. Now, within that system, you need to ask yourself, what is my tolerance for drawdowns? Like, how much am I willing to accept in losses before I say, uncle, something's wrong? Is the system broken? Is something happening? Is the system that I developed, is it off? Now, here's the thing about systems, okay? And this is going to be something, you know, the antithesis of what you hear, okay? The more indicators that you put on your chart, the more things that you use to try to figure out a system, the better you'll be able to explain historical price data. That's true, okay? You'll be able to explain historical price data better with all these indicators that you put on there. But if you fit your system to meet those indicators, it will not be profitable in the future. What? That's true. So if you have all these different indicators on there and you're getting a great historical view of the market, it's not going to make money in the future. Why? Because successful speculation is based on knowing the next move of importance, not what happened in the past. So you need to have a system that basically tells you this is a low risk trade for me to enter a buy or a sell with a certain amount of what's called R value. Okay. And I'm not going to I have other videos on R value, but that's basically your risk value, right? So if you risk 30, you know, you want a multiple back. You want 60, 90, 120. The more the better, right? So you need a system that does that. So it needs to actually forecast which way you believe that the marketplace is going to go next. Not historical data. So, and for me, price action is the only way to do that. And I'm going to get into that in this video a little bit about price action. But those are some of the things that you need to have in your arsenal in order to, you know, really be a professional trader. Okay, this is not. So this is the other thing is that, you know, trading is a business. It's like anything else. It's not a get rich quick. You know, if you're going to become a dentist, you're going to go to school, you're going to study dentistry for a long time. Then you can become you have to become a medical doctor to be a dentist. So, you know, I mean, there's a lot of work that goes into it. And then you can go and start to work on people's teeth. You know, you just don't take a weekend course and go, yeah, I'm going to start doing root canals. It just doesn't happen. But this is the mentality people have with trading, because the industry makes it easy for you to join. And they do that on a reason, because they want to take your money. They want the public, because the public, 95, 98% of them lose. So they just want to take your money. And they know that. So that's why they let you in. All you have to do is sign the paper and you can trade. You're a trader. Hey, you put 50 grand in an account. Congratulations. You're a trader. Okay. They're looking to take your money. All right. So we went over, you should have objectives. You should have an objective that's bigger than yourself. You should have a trading plan. Basically tells you how much, you know, what's your risk tolerance. You know, you got to really be honest with yourself about that, because some people think that they have the ability to take a 50% drawdown. Most people don't, especially if it's money that, you know, is tight. Like, you know, you save $25,000 and your significant other is telling you you have to be absolutely out of your mind if you want to risk this. And then you go, oh, I'm going to make a fortune with this. You know, and you start taking losses and you got to deal with your significant other. It's not easy, you know. That's another psychodrama that you're putting on top. So you need to have these objectives. You need to know what your drawdowns, what maximum drawdowns could be. You need to have a system that basically tells you, you know, a low risk move, you know, low risk trade for the next move of significance. Okay. You need to also, before we get into the technical analysis aspect of this, and I'll probably do 2 videos, because this video is going to be a little bit long. I see I'm already running 17 minutes, and most people don't have the ability to watch that long. So I'll do a second video on the actual analysis itself, but because this is important stuff. You need to basically determine what market type you're in. And that market type is going to be determined on whatever time frame that you're trading, because you know, a 1 hour chart or a 15-minute chart or a minute chart is quite different than a 4 hour chart, a daily chart, a weekly chart, a monthly chart. It's completely different. Okay. And the fundamentals are more prominent in the longer time frame. I'm talking weeklies and monthlies. Okay. However, nobody has the ability to trade that. I mean, if you had that, if you taken like weekly, monthly positions, I mean, okay, so you should really be watching this video. That's for sure. Okay. But most people that trade are day traders or weekly traders. You can't take that in consideration. So every time frame has a different type of flavor to it. So you need to understand the market type that you're in. So what are the market types? Well, you got 3 primary market types. You got a bull market type where the prices are moving up. You got a bear market type where prices are moving down. And you got a sideways market type where they're in the channel. You know, they go up, they go back down, they go up, they go down. Okay, so those are your 3 primaries. But also you got some other subcategories. Okay, so you got a bull market that could be volatile. What does that mean? Well, it's moving up, but there's some heavy duty spikes down before it starts to move back up again, and a spike down, is move up and a spike down, and move up in different spikes here and there. That's volatile. You could have a bull market that's quiet, just slowly, you know, put you to sleep, but every day it's just up a little bit, up a little bit, up a little bit. Same thing with a bear market. You could have a bear market that is volatile, whereas it's moving down, spikes up. Or you can have a bear market that's quiet. just basically slowly putting you to sleep, but every day, drip by drip by drip, it's going lower. Okay, dollar yen was famous for that in like the 1990s. Just every day it was slowly going down, down. Just it wasn't anything exciting about it. You just sold it, went to sleep, and put your stop in. You had to wait like 7 days, get like a couple of yen out of it. Matter of fact, if I would have kept my short from the bank in dollar yen, I went short at oh my gosh, my first short in dollar yen was, I want to say 281. 281 yen to the dollar. Think about that. That was a long time ago. But anyway, so if somebody would hit me over the head with a 2x4 and I woke up today, I'd be a very, 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 very wealthy guy. But anyway, so you have also sideways, right? So you got sideways volatile, sideways quiet. So in other words, it's slowly moving up to the top of the range and then gets knocked down and it goes back and forth slowly. That's kind of quiet. But then there's volatility too. Like it spikes up, breaks through the top. Oh shoot, everybody's trying to get in. And then the marketplace comes right back off, touches the bottom, or even goes through the bottom, comes back up. So that's a volatile market. So you need to basically understand the type of market that you're trading in. And why is that important? Because the biggest losses occur when there's a change in the market type. So if you were trading in a bullish, say, volatile market, and you intuitively start to understand that, well, the market's going up, and every time it spikes down 180 pips or 180 points, if I buy it with like a 50 pip stop on it, I usually catch that next movement back up, 200, 250 pips. So excellent risk reward, and you're trading that, and you're making good money with that. And you don't start to realize that it's going from bear, volatile, to maybe sideways. That's when you get hurt. Because one day you come in and it's not playing by those rules anymore. You're playing yesterday's game. Today the game is a completely different set of rules. So therefore you start losing money. So I'm going to leave this video here for that little bit, because we're at 22 minutes already. And the next video I'll go in a little bit deeper on price action, technical analysis. And I'll actually go over with you what I did for the trading room, how I took them step by step through a specific trade, and using our techniques, how we were able to capture a very good sterling dollar trade and also a good sterling yen trade. But that's not to say that everything we do is hugely profitable. But I am profitable overall because of one thing, that I will cut my losses and I will press the gas when I'm making money. See you in the next video. Cheers.